Investing and trading, what are they? Hmm. Hi, my name is Jason, and today I'd like to talk about what investing and trading is, or rather, mm, what is the difference between an investor or a trader, right? Because, well, a lot of people actually ask me what the difference is, and because they realize that before they step into the realm of investing, or as they begin their journey towards investing, they don't really understand what is a difference between investing or what is trading. So instead of always answering them one by one, right, I decided, okay, why not make a video out of it and then people can learn. Okay, well, let's get started talking about our topic for today, investing versus trading. Okay, so let's use this person Jay. Okay, Jay is an investor, and when Jay goes down to the stock market or the share market, right, to purchase a said stock or share, he looks for the fundamentals behind the said stock or share, right, before he actually puts his money down, okay, into investing into that company, right? So what is this fundamental actually? So a fundamental means, for example, the financial status or the financial health of the company, okay, and or the products that it's selling, the competitors that are in the market, right, and the market penetration rate of its products or its new products, if any, and or whether the products or services are actually sustainable over the long term. Okay, because an investor is someone that believes in profits over a long term. Well, whether is it in the form of dividends or in the form of capital appreciation, right? But let me give you a more simpler example. So let's say Jay goes down to the hawker center to meet two of his friends, right? Because he's interested in investing in either one of their hawker stalls, right? So a friend A owns a chicken rice stall. So and friend B owns a duck rice stall. Okay. So before Jay actually decides on which friend to invest in, what are the questions do you think he will ask himself, considering he's an investor? Okay, he'll probably first go down and see the history, right, between friends A chicken rice stall and friends B duck rice stall. Okay, he'll what would he probably do? Okay, so he goes down to the coffee shop and he sits down for an entire day, okay, and looks at a stall, the chicken rice stall, and see how many customers are actually buying chicken rice. He writes it down on a piece of paper, okay, and then he looks at the duck rice stall, and then he asks himself how many, and he observes how many people actually buys the duck rice, right? And then he goes towards the suppliers of these two companies and see chicken, are they more expensive, or ducks, are they more expensive, and then he gives a general number, a profit of how much person stall A makes and how much stall B makes, okay, and then he looks at the market around the area. How many hawker centers are there around this area? How many people prefer going to another hawker center, okay, to purchase a chicken rice or duck rice because it's cheaper, for example, okay, whether their competitors are there, okay, and then they look at the uh, 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 geographical data of these areas. For example, if let's say this hawker center is located somewhere along an older estate, right, say Hougang, okay, and most of the people living around these estates are probably 50, 60s and 70 years old, right? And say if chances if the chances are higher that these people have gout, okay, it's a pain in the foot. So if older people generally have gout, they what do they generally avoid? They avoid duck rice. So with that knowledge in hand, okay, would you invest it more towards the chicken rice stall or the duck rice stall?